Hello students, today in this video clip we'll practice how to measure and record depreciation on a plant asset by the stat line method. As discussed in class, the stat line method is equal amount of depreciation assigned each period. So once we purchase the asset, now this asset is capitalized for the future years, for the longer than 1 year. Once we start using this asset, then we make profit. We make the revenue based on the matching principle. We allocate the purchased cost throughout the useful life. So depreciation expense by the stat line method is calculated. Original cost minus the residual value divided by the useful life. So the same amount of the depreciation expense is distributed along the way along the life of the usefulness of the asset. So on January 1st, 2013, your company purchased a truck for $31,000 cash and recognized stat line depreciation. The cost of a truck $31,000 and estimated residual value, surface value is $1,000. So what is the depreciable cost? Right, 31,000 minus 1,000. So depreciable cost is 30,000. And then estimated useful life is 3 years. So how do we calculate? Let's make this the stat line depreciation schedule first. The book value when the company purchased is just $31,000. So $31,000 is the capitalized asset when the company purchased this the PP&E, the truck. So we recorded this $31,000, and here truck, we put the truck. The value is $31,000 by paying cash, $31,000. Okay, then let's complete this part first. 1 year, we use this asset for 1 year. So how do you record this? How do you calculate it? Again, original cost is 31,000 minus, right, $1,000 is residual value and divided by 3. So $10,000 is the depreciation expense for the 1 year. And then accumulate depreciation is first year is $1,000. So the book value is, how to get the book value for the end of the year 1, 31,000 minus depreciation, accumulate depreciation, right? Then the second year, the same, $10,000, and then this $10,000 is accumulated in the depreciation. So the book value is now decreased by additional depreciation expense. So we start from $31,000 original cost minus accumulated depreciation. Then yearly depreciation expense, again $10,000. Then this $10,000 depreciation expense is accumulated into the accumulated depreciation. And then the residual value should be the same as the difference between 31,000 original cost minus accumulated depreciation. So $1,000. In this way, we record journal entry. The same way, depreciation expense, how much, right? $10,000, and then by this amount we record accumulated depreciation. Accumulate depreciation on the balance sheet, so $10,000. Then the same account every year. Then this 10,000, this 10,000, and accumulate depreciation. The same name of account with the same value of that year depreciation. So how do we record, how do we post this journal entry on the balance sheet income statement? When we purchased the truck, $31,000. Okay, and then cash out $31,000. Oh, let's use this journal entry. Then depreciation expense for the first year, here on the operating expense is negative. And then accumulated depreciation is contra account that reduces the book value of this asset. So $10,000. The reason why we put the accumulated depreciation on the credit is that this is the contra asset account that reduces the asset amount. So the truck net book value is $21,000, as you can see that here, right? Then first year, if we assume that we don't have any other transaction, ignoring tax, so this $10,000 should be the same as the retained earning. So as you can see that we made this balance. Next year, we started from the ending balance of the last year, as we practiced earlier. So always we have to start from then on. But the income statement is just 1 year activity. We don't start from the ending balance. Okay. And then let's put this journal entry of the second year depreciation expense. The second year, then on the accumulated depreciation is increased by $10,000 contra account. So the net book value of the truck is reduced to $11,000. And then the same amount now should be added into the retained earning, $10,000. So we matched out. Finally, the last year balance sheet and income statement should be the beginning balance of the year 2015 is the same as the ending balance of this 2014. So we put the same amount as the beginning balance of the 2015. So let me just start from then on. Okay, then the last year depreciation expense still the same, $10,000. Then accumulate depreciation should be now additional minus $10,000. Then income before tax, if you assume that there's no other transaction, this retained earning, the beginning balance was $20,000. Then let's add this $10,000. So we got it. As you can see that we have the estimated residual value $1,000 here, and then last year the truck net book value is the residual value. Recording this accumulated depreciation $30,000 for 3 years. Every year depreciation expense is the $10,000. The sum of the depreciation expenses throughout the useful life is the accumulated depreciation on the balance sheet. Okay, so this is how we allocated the truck original cost $31,000 throughout the useful life with this step line cost allocation method. Okay, see you in the next video clip for the units of production method. Bye bye.